All right, welcome to this explainer. Today, we're diving into and completely demystifying the, let's be honest, kind of frustrating world of vision benefits. You know, if you're like most folks, you're paying premiums every single month, but probably have absolutely no idea how to actually extract the maximum value out of your plan. And what does that mean? It means you could literally be leaving hundreds of dollars on the table year after year. Well, today, we are going to change that.
Now, if you've ever been hit with a totally unexpected bill at the eye doctor, you are definitely not alone. It happens all the time. You go in for a simple routine checkup, casually mention to the doctor that, your eyes have been feeling a little scratchy or dry lately, and then bam, you suddenly find out your vision plan won't pay a single dime for the visit. So let's figure out exactly why that happens, and more importantly, how you can avoid those really expensive surprises in the future.
So here's how we're going to break this all down today. 1. Vision versus medical insurance. 2. Decoding the jargon. 3. What is actually covered. 4. The LASIK exception. 5. Benefits and employer trends. And 6. Maximizing your benefits.
Let's jump right into section 1. Vision versus medical insurance. Okay, so there is a massive divide between these two types of coverage. And honestly, misunderstanding this is where most people get tripped up. Medical insurance is your traditional safety net, right? It protects you against the totally unexpected. If you develop glaucoma, cataracts, or wake up with a sudden painful eye infection, that is a medical issue, and it's handled by your medical insurance. Vision insurance, on the flip side, isn't really insurance in the traditional sense of guarding against a catastrophe. It actually functions way more like a wellness discount club. It's strictly designed to help you pay for predictable, routine eye maintenance, things like checking your prescription every year and getting a nice subsidized discount on your new glasses or contacts.
Moving right along to section 2, decoding the jargon.
All right, first up, the premium. Basically, think of the premium as your basic subscription cost. Whether you actually bother to go to the eye doctor and use the benefits or not, this is the amount you're paying every single month just to be a member of the club. Now, if you get this coverage through your workplace, your employer might generously cover a big chunk of this premium for you, kind of like a perk to retain great talent and keep you healthy. Next, we have the copay. Copays are those small, highly predictable, flat fees. You usually pay these right at the front desk before you even sit down in the exam chair. It's a totally pre-planned expense, so you know exactly what that routine visit is going to cost you the moment you walk through the door. Whether that's $10 or $20, there is absolutely no guessing game here.
Now, co-insurance, this is a little bit different. And the really crucial point to remember here is that co-insurance is a percentage, not a flat fee. So for example, your plan might say you have to pay 60% of the cost for premium contact lenses while the insurance covers the remaining 40%. Why does this matter? Well, because unlike a flat copay, if you go and pick an outrageously expensive brand of lenses, your out-of-pocket cost is going to skyrocket right alongside it.
And then there's the allowance. You're going to see this word constantly when you're reviewing your benefits. Your allowance is simply a fixed bucket of money that the insurance company hands you to spend. Imagine you pick out a super stylish pair of $200 frames, but your plan's frame allowance is only $100. The math is beautifully simple here. The insurance pays their $100, and you just pay the remaining $100 out of your own pocket. If you stay under your allowance, you pay absolutely nothing.
Okay, section 3. What is actually covered?
So, most standard plans are going to cover your routine annual exam, plus they'll give you an allowance for standard single vision or progressive lenses. But, and this is a huge but, here is the major catch that traps people literally every single year. You usually have to choose between using your allowance on glasses or using it on contacts in a given calendar year. You almost never get to use it on both. So here is a little insider hack for you. Alternate your years. Use your allowance to stock up on glasses one year and then use it entirely for your contacts the next. It is hands down the absolute best way to maximize the value of your plan without shelling out extra cash out of pocket.
Now here is the exact moment things get really tricky. And this actually answers that question we posed at the very beginning of the explainer. The exact second your routine eye exam uncovers a medical issue, say chronic dry eyes, an infection, or even a complication from diabetes, the rules instantly change. Vision plans strictly exclude medical treatments. They will stop paying immediately, and your regular medical insurance has to take over. This means you are suddenly subject to your medical deductibles and your medical copays, which, as we all know, are often much higher. And that right there is what results in that surprise bill at the front desk.
Which brings us to section 4, the LASIK exception.
25,000 to 100,000 rupees, depending on the hospital and the specific technology they use. That is the staggering out-of-pocket cost per eye for LASIK in India. Because it's quite expensive, and because you technically always have the much cheaper option to just wear glasses or contacts, insurance companies almost universally classify LASIK as an elective or cosmetic procedure. And, you guessed it, because it's elective, your standard vision plan usually won't even touch it.
Now, while full, 100% coverage is incredibly rare, don't lose hope just yet. There are some really narrow exceptions where a policy might cover LASIK if a doctor deems it strictly medically necessary. Like, for instance, if you have a severe physical condition or deformity that physically prevents you from wearing spectacles. But listen, even if it's not medically necessary, many major vision plans actually offer pre-negotiated discount programs that can take a flat percentage right off your final laser surgery bill. So always ask your provider if your Vision Club membership gets you a discount.
All right, let's shift gears. Section 5, Benefits and Employer Trends.
Now, you might be wondering, why should I care about employer trends? Well, because these trends totally dictate the actual menu of options you'll be forced to choose from during your open enrollment next year. To combat rising healthcare costs, employers in 2026 are turning to highly transparent prepaid vision plans. These plans skip all that confusing reimbursement paperwork and simply offer upfront savings right at the doctor's office. We're also seeing a big trend toward cost shifting, where you, the employee, choose your own benefit tiers using pre-tax dollars. Plus, plans are focusing heavily on local independent networks instead of those massive corporate conglomerates. This doctor-owned local approach is huge because it can sometimes save you up to $300 on a new pair of glasses.
And finally, Section 6, Maximizing Your Benefits.
So first off, what if you find just an absolutely amazing pair of frames at a boutique, but they happen to be out of network? Well, surprise, you can actually still get reimbursed. You just have to follow the rules really carefully. As a pro tip, the absolute make or break step here is getting an itemized receipt. It must explicitly list what you bought, the exact date, the patient's name, and the provider's details. If you don't have that detailed itemized breakdown, your claim is going to be instantly denied. So get the receipt, fill out your insurer's form, attach that magical receipt, and just submit it online.
And brilliantly, if you happen to have a flexible spending account or a health savings account, you can use those tax-advantaged pre-tax dollars to bridge the gap. Want that premium anti-reflective coating your allowance won't cover? Use your FSA. Remember those LASIK discounts we talked about a minute ago? You can actually combine your vision plan's pre-negotiated discount with the tax-free funds sitting in your HSA to finally pay for that surgery. It is a fantastic, cohesive way to pay for everything that your standard vision insurance just leaves behind.
Which brings us to our final thought. You know, the vast majority of employer-sponsored vision plans operate on a strict calendar year, meaning at the stroke of midnight on December 31st, your unused allowances vanish forever. Poof, they do not roll over. So the ultimate question we have to ask is, have you checked your coverage lately? Seriously, don't let your hard-earned money vanish at midnight. Go check your plan, book that exam, and take control of your eye health today.